Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from social medias. I would like to welcome once again George Glasier, CEO of Western Uranium and Vanadium. Great to have you, George. Thank you for coming.
Thank you.
Thanks. You released yesterday 2024 milestones and highlights report, and that is primarily the reason why I wanted we do this interview. Can you walk us through the updates and share some recent developments with the company?
Sure. Yeah, we had our, of course, just to give you a background on what we did with our news release yesterday, we wanted to kind of summarize what we did in 2024. We had an excellent year, especially with advancing our mining operations and also for our processing plant. The mining operations obviously advanced. We're driving a drift to an ore body that was drilled out some years ago. But as we're drifting down there, we're hitting substantial amounts of ore. So we somewhat stop, and then we do a little bit of drilling because we basically need to define a little bit of that. We haven't defined it completely. We've got a new geologist on board that came on board in December, and he will be able to compile a lot of the information from the drilling data that we established during last year. We started to compile that, and our geologist that we had on board left in July. So we were without a geologist for a few months, and that slowed down our compilation of the data as well as our reporting. We'll get some reports out to the market on that excellent drilling data we had as soon as the data is summarized by the new geologist. So that's going to be very useful, I think, to the market to understand what we're doing with our drilling program and why we're doing it. But in the mining area, we've advanced both the GMG ore body as well as the Leonard Clark. Those will be two ore bodies we're ready to mine at full mining operations in about a year and a half. As we said in the press release, we intend to deliver some quantities of ore into an ore purchase agreement with Energy Fuels. We'll probably be delivering by March 1st into that ore purchase agreement and deliver probably throughout 2025. The quantities depend on what we want to ship. Again, it's a fixed price that we set based on the grade that we'll deliver. It's confidential under the agreement. We can't give the details of the pricing or tonnage, things like that. But we will expect to be delivering ore that's already been mined. So we don't have any cost, virtually any cost. We have the trucking cost of trucking that to the processing facility, but no mining cost because the material's already been mined in the past. So it should show some significant cash flows for this year coming in, which will benefit, I think, our balance sheet and going forward, certainly with our cash requirements.
Yeah, you said so March 1st, you think you will start. Last time you were in my show, you said you have only one amendment that you have to correct with Energy Fuels. So the paperwork is all done, right?
Yeah, there was just a couple of minor little issues in there. The tonnage of the trucks going in, things like that. The size of the rock has to be reduced to a couple of minor little points that we need to change. But other than that, the agreement seems to be acceptable to both parties. So we think that we should finalize that within the next week or so, and then be able to, we'll gear up. It'll take us about a month before we're ready to ship, just to haul the ore out to, the pad outside the mine. It's all stockpiled in the mine right now.
Okay. I like the part of the press release where you say, I will quote you. While 2024 marked as a transitional period, the company is now poised to begin delivering mine material while simultaneously scaling capacity. Our mining investments are guided by a target of a minimum 5-to-1 return. That's great. Generating 5 million of value for every 1 million invested. Are you in line with that?
Yeah, that's right. And that's our plan. And when we're putting $1 million into the mining operation, it'll easily return 5-to-1 on the investor side, because this is basically how this company is structured to be a cash flow company. And the value of this company down the road will be based on our significant cash flows, producing uranium at relatively higher prices than we believe we have today. And so our projections show that that's probably a pretty conservative estimate. So when you basically raise $5 million like we did with our capital raise this past few months, that should at least increase our capital by our value by at least that 25 million.
Mhm.
Now that's outside of the increase that we should get in the normal run up of, you know, the share prices based on the price of uranium moving up.
Yeah. George, what about the offtakes? Do you see more interested parties knocking on your door trying to secure some uranium? What is the situation here?
Well, yeah, we've been talking to utilities. We have not signed any contracts. We believe that the opportunity to sign these contracts will come when that price moves up. You know, you've seen the spot price. It's been pretty soft in the last 6 months of 24. We'll probably see that changing. We expect that to change during 25, see the spot price move. Of course, the term price is a bit higher than that, but we're looking at prices that could be considerably higher before we contract. I think some of the companies that have locked in prices are all right, but they may very well miss that upside of the price that we believe is going to come substantially in the next 2 or 3 years. May not come next year or this year, but certainly by the time the Russian embargo or restriction on Russian uranium come to into the U.S. by 2028, the uranium price has got to increase drastically, or we won't have a supply. So we look at the next couple of years for the uranium price to increase substantially. Took a look at what a lot of the analysts are saying. They say it probably at least is going to double from the price today. And without that, you won't get the production worldwide you need to fill the demand. So we're looking at contracting at substantially higher prices than the contract price today.
Fair enough. Also, in our last interview, I know we touched on the exploration plans for San Rafael, but not for Sage and Hanson Taylor. Do you have the budget and the plans for some exploration work on those two projects?
Yes, we do. We're going to open up the Sage probably within the next 6 months. We're opening up the old workings. We're going to go in there and decide what kind of exploration program we need at the Sage. We could expand that resource considerably with underground drilling. The resource that's there now has all been on surface drilling. So we find that underground drilling is much more effective and efficient. So once we open up that mine, determine what the workings are like, we ought to be able to lay out an exploration program for the Sage. As for the Hanson Taylor, that one has been fairly well drilled out. You know, there's other areas we could drill on it, but we have over 50 million pounds defined that we control right there. What we're doing is we're looking right now at the mining methods to put that into production in the next 4 or 5 years. So we've looked at several methods of mining that deposit. We've got some technical experts looking at it. And I think by the end of 25, we'll be able to announce our program for advancing the Hanson Taylor into production. But that production is probably out 4 or 5 years, which corresponds with what we believe is going to be a substantial increase in the uranium price. So both of those projects will be moving forward this year.
Okay, so you are targeting much higher prices with the offtakes and with the development of some of your assets. I get that part. One other thing we didn't touch on the last time was the kinetic separation technology that you have. Are there any news with that? Any new progress or ideas?
Well, yeah, there certainly is. And what we're doing is we've done some tests on the best balance of how to run that. In other words, you put in 5 pounds of ore, whether you get out 1 pound of material to process through the mill, or whether you get 1.5 pounds or 3/4 of a pound. What they call that is the mass balance going into the processing plant. We've done extensive testing on that to fine tune the best economics for mill and processing operations. So the kinetic separation is continuing to be tested to refine the perfect balance of what you feed into it and what you come out with going into the processing plant. So that is ongoing, and that'll continue for another 2 or 3 months. We haven't been able to announce the ultimate cost of building the processing plant because that depends on the operation of the kinetic separation.
Yeah, I wanted to ask you about the processing plant, and if you can give us an update on that.
Well, we said in the press release, we've almost completed the base data at the Green River site. Now we're starting the baseline data collection at the site in Colorado. We've got a new name for that site. We're going to call that the Mustang Mineral Processing Site. That's close to all of the resources that we control in Colorado. It's much closer, and that's the reason I think we discussed last time why we acquired that site. The transportation savings alone will justify that site. So the monitoring equipment is in place now. We'll start the monitoring. We've already monitored for the groundwater. There's 9 wells already on that site. So when we bought the site, it came with a lot of the infrastructure that we already, what we will need to complete the monitoring. So we think we'll be ready to submit our application probably in the second half of this year for the processing plant license, and bring that one on and probably start construction of that in late 27, take about a year to build it, be ready late 28. And that corresponds with what we believe will be maybe where the uranium price really starts to move upward. And the demand will be there certainly in that time frame. And that's when we'll be looking at contracting for delivery starting in that 28, 29 period.
Yeah. George, what about M&A? Would you be open for a sale or joint venture on your non-core assets? And on the other hand, are you looking to acquire more land or even development projects? What's your take on that?
Absolutely. And I think we announced in there, we've been staking some mining claims around known deposits right now. We are going to do some exploration on that. Those are deposits that are around the new mill project. We've staked about 80 claims. We'll probably stake another 100 claims this year and then start the drilling program. So those are internally generated properties. We're also looking at obviously acquiring properties from third parties. Mergers are not out of the question. We think there's a lot of synergy with some of the properties. For instance, the Anfield properties. A lot of synergies between our properties and Anfield. Anfield has a deposit right next to the Sunday Mine Complex. That one could be jointly operated under a joint venture or a merger. So we're looking at that constantly, obviously, and to increase the production from our existing properties substantially. So that'll be one of the things that we will be looking at and doing in 25. Definitely looking at opportunities out there. And if the opportunity comes around and the price is right, a merger of our company with another company is certainly possible. If it increases the share value and the value to the investors, that's what we will be doing. I don't think that will happen probably in 25. I think that the work that we're doing is leading up to substantial increases in our value, which should be recognized to our investors if we do a merger down the road. But we look at that as a real possibility probably in the next 2 or 3 years, but probably not 25. But you never know what might come along. But we're certainly not ruling that out. If it is a return to the investors that they're satisfied with, we'll certainly consider it. You're an investor. What do you think?
Well, I tend to agree with you with everything you said. So, disclaimer, I own shares of Western Uranium, so full disclaimer, and I look forward for any success and anything that brings value to the shareholders, just like you said.
Sure.
Yeah, George, I saw the post on your social media where your miners are at training class with MSHA. That is the agency that regulates mine safety. How often are the miners going through the education like that?
Well, they have to be updated every year. Before we hire a new miner, he has to go through a full week of training, both classroom as well as at the site. And then each year, the miners that have had that base training have to go through an updated class. And that's the class we put out where we were having all of our miners had to do the 1-day training to update their training, 1 day in the classroom, and then they have some safety instructions at the mine site. But that happens at least once a year. Of course, they have safety meetings out there every week. And so we've had the MSHA, as you referenced, does inspections of the mine. And we've been very successful in basically having very, very few. We had some very minor violations, but nothing major. And so you've got to be very careful of that, because if you've got major violations, they could shut your mine down. That has happened recently for a few mines, and it's just because, they've had violations that they haven't been able to correct. But we've been very fortunate. We're very cautious and always, careful about our safety of our miners out there. And they understand that. You got to work safe. Our bonus program to the miners is based partially on their safety. So they understand if they're not working safe, they're not going to earn that extra bonus.
Yeah, so you would say that the standards are very, very high and you don't have any problems with that?
No, they're very, very high, very high on all the safety standards, and we have no problem with that. I think mines need to operate safely. That's the best thing that, that we can expect from this. But we have no problem with meeting the standards, and they're very high standards in the U.S.
Yeah. George, I pulled the chart from Fintel. It's about institutional ownership of your company, and I saw in December big spike up in institutional ownership of your company. Can you give me more color on that? How did that happen actually?
Yeah, in the past, most of our investors have been the retail investors. I'd say in the last year, we've had a real spike in the institutional investors. Our last capital raise was probably 80% institutional investors coming into the stock. And I think that shows, the confidence that these investors have in our company. It's a little bit harder for startup companies to get the institutional investor in. They need to see a history that you're doing what you say you're going to do, that you're going to see value increased for them. But we saw that with our last capital raise, where the institutional investors came in, and actually they could have taken more than what we allocated to them. We wanted to give our retail investors an opportunity to come in, so we saved a portion of it for the retail investors. We could have had 100% institutional investors, but we always want to leave some for our existing shareholders and additional retail. But I think that's why the chart shows our institutional investor has gone up considerably over the last 6 months, and probably will continue with that balance going forward. Not that we have any plans for a capital raise, but we think the institutions are pretty stable coming into our shares. Of course, we've got shares also held by the ETFs. A couple of ETFs hold our shares, but also some of the funds, which are institutional, hold our shares now.
Yeah, that's why I wanted to ask you. So you believe that institutions have vote of confidence? They will back you up. They will back you in the next financings. Do you believe that?
Oh, absolutely. We see that. We see that they basically are coming in and seeing the good companies, the ones that are going to have value, that have very little risk to them. They're not investing in the startups. There's no doubt about it. They want to see where they go. These exploration companies are probably mostly relying on the retail investor. But once you get a track record, and especially when you're going to show some cash flows, I think the institutions are very interested and have shown that in our share.
Yeah, agreed. Final question, George. How will your news flow look in the upcoming period?
News flows, we expect to have news flows certainly more this year. A lot of things going on. We should have news coming out at least once a month, if not more. I think that's the key. We've got a lot of activity going on, so a lot of things that we report on. Last year, we had fewer news stories out there, but I think now we've got a lot of things to report on. We've got the drilling program, we've got the mining program, we've got the processing plant program, and we've got the acquisition program to the extent we drill on new properties or acquire new properties. So I think there's a lot of things we're doing now that'll create news flow for the market.
Okay, George, thank you very much for this update, and I look forward for another update when we will have some news new news.
Always good speaking with you.
Thank you.
Thank you.